Good morning, everyone. Commissioner Lloyd, yes, here you are. Before we start, it seems like your internet quality is good from our side. Are you hearing us okay?
I'm hearing you just fine. We're in Yosemite and hoping to be able to stay the next couple days. But anyway, I'm here.
Awesome. Thank you. Okay, so it is September 30th. This is a special meeting of the Board of County Commissioners. The first thing on the agenda is public comment. Is there anyone here who wishes to make a public comment? I do see Michael Raber in the room. I guess I'll let you state your name. If you would please come up, state your name, roughly where you live. You'll have 3 minutes. And then if you're on Zoom, find your raise hand button, you'll be next.
Ready? Yeah, Michael Raber from Echo Hills. And I wanted to bring to your attention that the routing maps for getting Idaho Springs and whatnot are taking a number of vehicles over the Little Bear Creek Road. And when I left here last week and went home, and the guidance system doesn't say take 70, don't take 103, and it's taking you right up Little Bear Creek Road. And the problem with that is we got to the first hairpin coming back up, and there's a semi truck there, full size, not a small one, full semi that's been routed that way, made it through the first curve, got to the second, pulled over to the side, don't want to know what happened after that. And people coming down, same thing. They're being routed on Little Bear Creek Road coming down, and that lower 3 miles is nothing but switchbacks, dirt roads. And people were backed up over half of that route trying to come down. So the issue is that while we have a sign at the top on 103 for trucks over such and such, do not come this way. Generally, they don't see it anyway. And there's nothing that I saw coming up at the bottom. So if there's any way you know of to get hold of these mapping companies to tell them that don't route people that way because it's dirt. And I've had people, I'm stuck on the curves, and people and rent-a-cars and otherwise are asking me if this road goes to Idaho Springs. They've never been on it, had no clue that it was a dirt road, and that the switchbacks I can't even negotiate if they're in a larger vehicle. So if there's anything we can do, because it's become a accident-prone health hazard, to do something with either putting better signage, us, at the bottom to alert people that this is not a through. But the big problem is that it's the default routing whenever I-70 is backed up. And instead of routing them up 103 past Echo Lake, it's not doing that. It's routing them up Little Bear Creek Road. So I wanted to bring that to your attention. And anything you can do would be appreciated. Do I have a minute left?
You do.
I also went through the handgun certification course that Sheriff's Department taught last week. And I want you to know it was excellent. Those guys were so well prepared. It came off flawlessly. And I've been to a lot of classes before, and I've never been to one where it was so well done and orchestrated and safety and everything. And I just can't say enough good things about it. So thank you all for supporting that, and pass it on to law enforcement, Sheriff's Department up here. Okay. That's it.
Thank you for your comment.
Thank you. You.
Typically, we will do commissioner update after public comment. We don't have that. I just for the public, we have received an email from another person about the situation on Little Bear. It is a situation we have heard much about and made several attempts to rectify. I'll just leave it at that because it's not on the agenda. Next on the agenda is consideration of approval to accept the 2024 annual comprehensive financial report and to direct the county budget officer to submit the ACFR to the state auditor. If we could begin by answering just a quick question. I think a document like this, and this is a question for you, Rachel, this is really not a document for the board to modify. This is really a document that for the board to kind of accept and pass along. Is that correct? Unless we see some glaring error that needs to be changed?
Thank you, Commissioner. Yes, and Chair Marlin, the document itself is the intent to provide the end of year financial statements. It is not meant for editing. It is also intended on the outcome side to provide the county the opportunity to meet specific filings in compliance with statutory and legal requirements across the federal and state agencies.
Okay, thank you. That said, this is not an admonition not to ask a lot of questions. This is one of the best tools we have to understand the finances of the county. So please proceed.
Thank you. And thank you very much for the scheduling of this special meeting. The purpose, as stated earlier, is to receive direction from you all to implement the filings required specific to the 2 CFR 200 cost allocation plan that's required that the county to file with our federal pass-through agencies at the state level. This plan identifies the method in which the county will allocate dollars underneath its administration of operations and then charge back those dollars through federal grants that we receive in either pass-through or directly from the federal government. That being the first step, that document is informed by the annual comprehensive financial report itself and the dollars and details within the report. This report was prepared and provides detail around the end of year 2024 and specific around each of the funds in which the county maintains dollars. When I say funds, that's a term specific to the buckets of revenue and expenses that the county completes on an annual basis. And those funds, while there are 12 in total, 2 of which are actually component units. One of the components units is the Emergency Services General Improvement District, and the other is the Clear Creek County Housing Authority. That housing authority is not to be mistaken with the new Regional Housing Authority, which is a completely separate district from the county, and not a component. After we complete an annual at year end, in each year, we have to validate our records and then provide an accounting of all of the dollars and from where they come in and where they go out. As well, we have an obligation to show the rigor of our accounting practices in alignment with the general accounting practices, as well as with our standard operating board across the federal agency, across the federal government. So the GASB and GAAP, as they're termed, are 2 methods that we are using to validate the methods in our accounting practice and in our spending. What's unique about the ACFR, and it's again the annual comprehensive financial report, what is unique about the ACFR is that it not only provides the financial statements, but it also includes a schedule of information related to operations, and it provides a 10-year view from 2014 through 2025 of activity, or 2024 of activities. And so, for example, if you were to look at Schedule 14, that Schedule 14 shows activity by operations that is a window of time of activity, for example. That window of activity, while this document is intended to be filed as soon as possible and by the deadlines, the unfortunate reality of the state of our finance team and at the end of 2024 in getting our capacity back up to speed has resulted in us being behind schedule. So we have made all of the required extension requests, and today is the due date for all of those filings. So the filings of our 2 CFR 200 Part 200 plan is today. Our state audit, which is an independent audit of the annual comprehensive financial report, is also due today, as well as the single audit of all of our federal grants is due today. So the direction I'm requesting is specific to direct me to file these documents today, meet the deadlines, and ensure we do not see a reduction in our distribution of funding. If in fact I am not directed to make these filings, there is opportunity for the state to withhold its housing user tax fees to the county, and that would be the impact of that. If you have questions, I'll move into kind of a higher level summary of the detail. But before I move on, I just wanted to make sure and answer any questions before I move on just kind of that general context.
Colleagues?
Okay. Thank
Okay,
you.
thank you.
Yeah, I think what's really unique about the timing of this, yes, it is unfortunate that we've had to ask for extensions, but the reality is that we're also in the preparation phase of our budget. And it gives you all, as commissioners, an opportunity to see and have greater context around how the information from year end moves to the next year's budget. And what's most interesting is around the general fund is, last year we implemented a variety of reductions across the county. That was in fact in response to what we had observed early on in 2024. And once I had arrived, I recommended that we move to a different phase of review on our finances. And that review was to reduce the spending, and really in part because of our projections within revenue. And as this report notes, is a significant change in revenue projections versus what was received in 24, the same in our expenses. So just to point out, in the general fund, the overall fund balance was decreased by $2 million compared to 2023, when the balance was decreased by $135,000. So that was a significant change in spending in 24. And then the revenues collected were also significantly reduced. We decreased by 6.8%, which was a significant change. We reduced by 6.8% in 23 and minus 0.7% in 24. So what the impact is for the 2025 year is that we have reduced our spending and improved our revenue projections, but we are still functioning in a reality of budgeting in a deficit, but we are balanced. In the general fund, our expenditures increased by $500,000 or $474,727 compared to a decrease in 23. So the impact of increased spending, lower revenues, is really what we were trying to adjust in 2025. Road and Bridge Fund is maintained, mandated by state statute, and that this fund records costs related to road and bridge construction. The fund balance was at $5,860,506 at the end of 24, compared to $6,276,174 at the end of 23. There was a decrease in spending in 2024, and this was due to a reduction in capital activity. As a measure of liquidity within the Road and Bridge Fund, it's helpful to compare total fund balance with the amount of burdened expenses for a calendar year. And the fund balance within the Road and Bridge Fund represents 92% of 2024 as compared to 2023, which was 85.7% expenses. Now, what does that mean? That the fund balance within Road and Bridge was sufficient at the end of 24 to cover 92% of its operations. Now I'm going to put that against the general fund now. The general fund, in its liquidity, in evaluating its liquidity, the fund balance at the end of the year represented 83.2% of total 2024 expenses. That This compares to 95% in 2023, 95.4% in 2023. So you can see there was a significant increase in use of fund balance in 2024. So again, liquidity is just a measure of how much money you have in unassigned fund balances so that you can cover operational expenses. I'm going to move on to the ambulance. I chose to pull out the ambulance sales tax fund as it is one of the newest funds within the county. That fund at the end of 2024, and as a measure of liquidity, again, just to keep this in context, the total fund balance represented 24% of 2024 expenses as compared to 2023, which represented 28%. So there's very low liquidity within this fund, within the ambulance fund. Capital assets, as we identified in July of this year, the capital assets management within the general ledger was a significant impact onto our ability to complete the September or to complete the ACFR. We discovered that the general ledger recording of our assets had languished for since 2022, and as a result, the team will be focused this year on providing an improvement in that capital asset management. This was not found to be a finding of significance, but it is a management issue that we need to address, and we're working on ideas for the coming year in 2026. But the capital asset portfolio continues to be a challenge for us as a county. Our assets and investments in assets from governmental activities in 2024 totaled $84,369,937. Compared to 2023, when we invested $86,553,089. The big picture being the county assets, while we invested less in 2024 into our assets, that's really in relationship to our spending within the two major funds of capital assets and capital assets within the general fund and road and bridge fund. Moving on to the health and debt service fund, the county's long-term debt related to the clinic decreased $540,000 for the principal, and the county remains on track to complete payments on this debt by the year 2030. Just in summation, there were no findings of significance that were identified. And while not a finding of the significance, the county's ACFR, as I said before, was delayed because of its capital asset portfolio management. I do believe we should have on the line our external accountant who completed with Hinkle and Associates, who completed our.
Would this be Jim Hinkle?
Yes, please promote him. That would be great.
Let's pause for questions before we go to the next presenter. I have a couple, but I don't need to begin, colleagues. You said, just for clarity's sake, you said health clinic debt service will be completed by 2030. Will we be making a payment in 2030, or is our final payment in 2029?
Our final payment is in 2030.
Our final payment is in 2030. Thank you. And then I have, just to understand some of the language in here, when I'm looking at page 13, first paragraph of financial highlights, it reports 16,679,000 in unassigned fund balance. When I go to the first page of the balance sheet, page 24, I see 19.4 million in cash and investments. Can you explain what the difference between 19.4 and 16.6 is?
Yes. Jim can speak to that as well. Most of that is within the Tabor Reserve restrictions as well, but Jim, if you want to go ahead and punt it over to you.
Good morning, and thank you all for giving me a little opportunity to talk about the financial statements and the audit process. The answer to your question is that number, the $16 million number that you're referring to, is in the management's discussions and analysis. And that actually refers to page 24 on the financial statements, which is the fund balance breakdown between non-expendable, which is prepaid expenses, the Tabor Reserve, any committed funds internally, and the unrestricted fund balance. That is on what we call a modified accrual basis. So that includes accounts receivable and accounts payable. So if you took your cash plus accounts receivable at year end minus accounts payable and other accrued liabilities at year end, that's where you end up with your fund balance. And typically with most municipalities, cities, towns, and counties, accounts receivable and accounts payable aren't real significant. So a lot of times your cash balance ends up being pretty close to that unrestricted fund balance, but not exactly.
Thank you. That helps.
I hope that helps.
So I see total liabilities 2.8 million and unrestricted unassigned fund balance a little further down. Those are the two numbers you're referring to, 2.8 million and 16.6. You're right, they don't
That is
quite
correct.
add up.
And if you look at the top of that page, that's where you'll see the general fund cash of 19 million.
Mhm.
19,406,884. And by definition, fund balance is all assets minus all liabilities. And then a portion of that fund balance, as you can see at the bottom of that page, is the restricted is the Tabor Reserve. And then the non-spendable is technically the prepaid expenses because that's an asset, but you can't spend the money that you've already spent. And that's why it's called non-spendable.
Okay, and so this document does not reflect, this is what I thought might be happening. This document does not reflect any board policy. This reflects legal restrictions such as the Tabor restriction.
Correct.
Correct.
Okay. Thank you. That's all I have for now. Anything else? Please proceed.
Okay, now is it my turn?
Yes, and just before we go in, I just wanted to point out one item, and I know Jim, I'll let you. I just wanted to point out this morning I heard from the sheriff's team that in our Schedule 14, you'll see a lot of the details around operational activity listed. That Schedule 14 includes the number of post-certified employees as reported by the sheriff's office. It was listed at 24 this morning. They are revising it to 25. So I'll make that minor modification. It's not a significant change, but I'll make that minor modification before we complete the submissions today. I just wanted to make sure and point that out before I punt over to you, Jim. Thank you.
All right. Again, my name is Jim Hinkle with Hinkle and Company CPAs, and we did do the audit of the financial statements for the year ended December 31, 2024. We start off our audit by updating our understanding of the system of internal controls throughout the accounting department. Primarily, we are looking at the cash disbursement cycle, the cash receipts cycle, and the payroll cycle. A transaction typically takes 3 steps: the initiation, the approval, and the recording of that transaction. And we want a segregation of duties so that one person is not doing all 3 of those steps. That is the strongest system of internal controls. We also identify what we call control features and of the internal controls, and that's where you have a system where invoices are approved prior to payment, and that the account coding is approved prior to posting into the general ledger. And we test those control features of the internal controls by doing random samples of transactions from throughout the year, as well as through all of our testing of the year-end financial statements. We do all of this for really 2 reasons. The first is that we are looking for any significant deficiencies or material weaknesses in the internal control structure. And based upon our analysis and all of our testing, we did not find any significant deficiencies or material weaknesses in your system of internal controls. That's the answer that you're really looking for. A significant deficiency is defined as a design flaw in the system of internal controls that would allow an error to go undetected in the ordinary course of business. And a material weakness would be a significant deficiency that might result in a material misstatement to the financial statements. And again, we did not have either one of those, which is what you're wanting to hear. We then turn to the audit of the financial statements. And we primarily do a lot of tested details where we drill down into account balances and we compare accounting transactions to supporting documentation such as invoices, cash receipts, contracts, agreements, to ensure that the accounting is in accordance with general accepted accounting principles. We also do a little bit of analytic review where we compare the current year's revenues and expenses to the prior year, to budget numbers, relationships within the balance sheet and the income statement. And we're looking for relationships that we either can't explain or didn't expect. And if we do find those, we do more test of details. The end result of that is our audit opinion. Yours is technically referred to as an unmodified opinion, which in layman's terms is a clean opinion, states that the financial statements are prepared in accordance with general accepted accounting principles. And that's also the answer that you want to hear. The county receives a significant amount of federal, yes.
I want to ask you a question on that. When you discuss the financial controls, you are not so much referring to whether expenditures were appropriately authorized by the management team. You're more referring to whether they accurately reflect what the money was spent on, correct?
Well, not quite. So the first part of what I described was our analysis of the internal controls and our testing of those control features. That's where we're looking to determine whether or not the expenditures are in fact properly authorized before payment. And then when we do any testing throughout the audit, we're looking to see, when we look at an invoice, was this properly approved? Was it properly paid based upon the supporting documentation? And then secondly, we're also determining whether or not the accounting is in compliance with general accepted accounting principles. So we're a little bit doing both of those.
Okay, thank you. And so I don't want to spend too much time dwelling here, but I really want to understand when you say making sure an expenditure was properly authorized, whose authority, and this might be actually a question for staff, whose authority are you looking to ensure that an expenditure was properly authorized?
Generally, it's like a supervisor or a department head of that department. Someone other than the person that is initiating the expenditure.
So
Second person.
do you have some version of an org chart that shows you who is authorized to make expenditures of certain amounts?
Yes, as well as the general policies and procedures of the accounting department within the county.
Okay. And Colton, you look like maybe, or Rachel, do you guys have any commentary? Just, you can
Sure.
probably, the intent of my questions is just to understand how, when the board passes a budget that has big numbers in it,
Sure.
how that authority to spend is disseminated throughout the organization.
Sure. So the budget itself is built on line items, then the line items roll up into one large resolution, which is the dollar amount that's passed as part of the resolution. The dollars, though, are described in the budget document itself, which is an accompaniment to the resolution as passed. Once the line items are agreed on, I enter those into the system, and then staff are allowed to begin spending, the system being Springbrook. I set the base budget, adopted budget dollars to ensure that the amount budgeted is also the same as what is line items within the general ledger for budget purposes. As far as spending is concerned, when someone buys a piece of equipment, we follow the county's purchasing policies that are in place. All of those factors come into play based on the dollar amount to be spent. And then as our accounts payable team reviews payments that come in, they come in through the departments, or the divisions themselves as requests to our AP team. And those are then placed into the system. Ultimately, the dollars that go out the door come through the treasury. Those dollars are managed by the bank accounts and through the treasury.
Okay, thank you. Please
Does that
proceed.
help?
Yep.
Okay. Secondly, the county receives a substantial amount of federal awards, either directly from the federal government or through the state of Colorado or other what we call pass-through organizations. As a result, you are required to have what we refer to as a single audit. That was passed by Congress in 1984. Prior to that, each federal agency would send out its own auditors to audit the compliance with their federal programs. The Single Audit Act now gave that responsibility to the external auditors, so that when we audit the financial statements, we're also required to audit compliance with federal award programs. We issue two opinions with respect to, sorry, my light was going out, with federal awards. The first is what we refer to as in compliance with government auditing standards. And that opinion looks at the county as a whole and effectively asks the question is whether the county has the internal controls in place to know what federal programs it participates in and receives money for, and what those compliance requirements are. And while that sounds pretty direct, a lot of times when money is passed through, such as the state isn't as well documented as far as how much of those dollars are federal dollars, which is versus state dollars. And then we're also required to communicate any non-compliance with any federal program that we may come across during our course of our audit. And that opinion is also an unmodified or clean opinion, which is what you want to hear. States that the county does have the internal control structure countywide to know what federal programs it receives money in and what those federal program requirements are. The second opinion with respect to the single audit is referred to as in compliance with uniform guidance, and that is with the federal regulations. It prescribes details for us to select specific federal programs and drill down into those programs and verify compliance with those programs. And based upon the federal regulations, we audited the COVID-19 program, which was a little over $1 million. And that also is an unmodified or clean opinion, states that the county does have the internal control structure in place for that specific program to ensure compliance, and that based upon all of our testing, including some compliant or sampling testing, we did not find any instances of non-compliance with that program. All in all, the single audit report is clean. We did not have any findings or question costs or findings regarding the financial statements. So that single audit is a clean report, and it will be submitted to the Federal Clearinghouse later today so the government agencies can see that the county did have a clean single audit with no findings and question costs. Any questions on the federal compliance testing before I move on?
Alex?
I don't have any.
I don't think so.
Okay. We also issued what we called a required communication letter. We are required to communicate in writing if certain events occur in the course of an audit. And we had nothing negative to say in that letter. We did not have any disagreements with management. We did not have any difficulties during the course of the audit. We did make a couple of audit entries that are disclosed on that letter. They were not significant, and they were more effectively closing entries for year-end accruals than anything else. I have talked with Rachel about the capital asset situation with the county. I do believe that she has the focus correct on utilizing the software that the county has invested in. I have also talked with her about a couple of things that I think the county can do within their general ledger that would allow the accounting department to reconcile its capital asset programs throughout the year and not have to wait to year end. And we've made arrangements to meet within a couple of weeks later in the month and go over some of those processes that she can adopt within her department that will make that accounting for capital assets more easy and allow for that reconciliation to occur throughout the year so that hopefully next year it will not necessarily impede the process of the audit. Finally, I think one of the most important things that I like to communicate to governance bodies is that throughout the course of the audit, we felt as auditors that we had open transparency. Everything that we asked for was provided in a timely fashion. Nothing that we asked for were we denied access to, and we felt like we could ask for whatever we felt necessary in the form of supporting documentation and other documents to perform an independent external audit. So I think that's important for the commissioners to hear as well. Any questions?
The only question that I have, what is the timeline on this audit? When did you start and
Rachel, you'll have to help me remember exactly when we started, but I think it was like April or May when we started on the basics part of the audit, got through most of it, but then waiting on the capital asset records and the depreciation on those capital assets was what then got delayed, and we had to pull off for a little bit while that work got completed and performed.
So yes, that's correct. We began in April, really pulling what we could out. And what's I really want to thank the team at Hinkle, Cheryl and Lauren and Janae. They've all been very helpful to us. The team in finance, there was just one person at the end of September, and these entries and edits and work along the way to ensure that we're in compliance was really difficult because of the volume of employees. I did not have an accountant at the time. I had a half-time accountant, and I had not been into Springbrook. So they were really fantastic at really conducting what almost appears as though it was a forensic audit in many ways, because we were trying to capture so many different spaces and places of information. So it took us tremendous amount of time. If we hadn't had the capital asset, we would have likely hit all of our deadlines and would not have had to ask for the delays. But that capital asset hurdle in July really slowed everything down.
And let me add one more thing that might help better understand the situation. You have effectively, all governments effectively have two different sets of financial statements within this package. The first one is referred to as the government-wide statements, and that is on a full accrual basis, which is just like any normal business. Microsoft, Apple, General Electric. Expenditures on capital outlays are capitalized as an asset and depreciated over its useful life. Any debt proceeds that is received from new debt is not reflected as revenue, but as a liability that is paid off over time, typically what you would see in a business. The second set of financial statements is the governmental funds, and that is on a modified accrual basis. And in many circles in governments, we refer to that as a sources and uses statements. What sources of revenues did the county receive during the year and immediately after the year end? And what payments were made during the year and immediately after the year end? And so, for example, with capital assets, expenditures on new assets are recorded in the general ledger on the general fund or the other funds as expenditures not as assets, because that's a use of funds. Many governments keep their general ledger on that full accrual, excuse me, the modified accrual basis, and record the capital outlays and appropriate funds as expenditures. And then only after year end do they go back and look at what those capital outlays were, what should be capitalized, what should be added to the capital assets, and then convert their general ledger to a full accrual basis of accounting. That is typically how a lot of governments will do their accounting. And again, that is why the capital asset issue was not really addressed throughout fiscal year of 2025. The regular accounting for day-to-day transactions was done correctly and appropriately. The general ledger was accounted for appropriately throughout the year, recording expenditures as capital outlays in accordance with that modified accrual statements. What Rachel and I talked about is adding a couple of funds within the general ledger specifically designed to account for the capital assets throughout the year, separate from the general fund, the road and bridge fund, the ambulance fund, etc., so that there is this routine accounting for those capital assets throughout the year. So, well, this was a hurdle that needed to get over. I'll be real honest and tell you that it's not that uncommon. We have run into this with other municipalities, counties included, that because of the way the general ledger is accounted for on the modified accrual basis, capital assets are left until after the end of the year, and that's what creates the delay. So while it needs to be fixed, it is not an unusual issue. Hopefully that clarifies this a little bit.
I also want to add a couple of things that are on the horizon that make the capital asset inventory even more complex, which is not a bad thing, but I want to point out the reality of the complexity the county is endeavoring on within its accounting and measure of finances. The use of leasing and the expansion of leasing, which is terrific in our expense side, and really kind of managing our expenses and ensuring that we're maintaining our pieces of equipment. That accrual accounting that Jim is describing becomes more complex because we have to watch the expenses, and then once the leasing results in an acquisition, turn it into an asset. And that method has not been completely described, and we're just now, many other organizations have been using leasing in a far more operational method for many years, and we're just beginning to endeavor on that. And since 2018, really the complexity of the funds and the types of activity within the financial statements has really expanded significantly. And our staffing level in relation to that complexity is something I've also been discussing with the team, and that larger picture of, maintaining the separation of duties and accounting for not only the approvals, but the separation of entries is important. But the complexity begins as we begin to use more sophisticated methods for managing our finances. And as a result, that burden changes the way that we have to look at our finance operations in the division.
Can I ask you, is that complexity, it sounds like it's not just due to a couple of, I can think of maybe 3 additional funds that have been created over that time period. But I don't think you're referring to that. Can you say a little bit more about what you're referring to?
Sure, yes, it is not only the creation of the additional funds, it's the debt management, the potential improvements in revenue opportunities that are presented into the future, as well the use of leasing. Like I said, the leasing of assets actually impacts our net position in a different way. It can reduce our net position because our asset inventory goes down, but it maintains an expense side that's higher than in the past. And so we have to ensure not only the capital assets are managed appropriately throughout the quarter, but those leases are also managed appropriately across the quarters so that we don't lose them and at year end are scrambling to try and not only address depreciation values, but also the creation of an asset into our full modified accrual system.
Yeah, and if I might just add a couple of clarifying comments. You go back about 5 years ago, 4 or 5 years ago, and we had what we accountants used to call capital leases. Let's say we had a road construction piece of equipment, large equipment. We could either buy it and borrow money to buy it with, or we could buy it through a lease that in effect we were paying for the entire purchase price of that equipment. It was just referred to as a lease as opposed to a loan. And then we either had like a dollar bargain purchase price at the end of the year or at the end of the lease, and we would own it. And those were called capital leases. And those on the full accrual statements, we would record as an asset and a corresponding liability. But what the Accounting Standards Board found out was there was a lot of leases that we used to call operating leases, where let's say we leased a piece of large equipment for maybe 3 years and then gave it back, that we had these liabilities that we were committed to in future periods. And GASB, the Government Accounting Standards Board, said we want all of those reflected as liabilities on the full accrual statement. So even though you have no intention to purchase these assets, if you've got a 2, 3, 4 year commitment to make payments on an asset, on a piece of equipment, we want you to book that as a liability and a corresponding asset, what we call the right to use, because we don't own that asset, we just have a right to use. And so even though the amount of leases that a government may be involved in hasn't necessarily increased, the accounting required for all of those leases has definitely increased because of this accounting change, that the governing body of accounting wanted all future commitments for cash to be recorded as a liability on the financial statements. And that's where a lot of the complexity has really added, is the accounting changes that have occurred in the last couple of years.
Okay,
Hopefully I
changes,
didn't get too technical
rules
there.
that we're supposed to comply with. Thank you. That's helpful. I wasn't sure if we had just changed the way we were doing business around here, or I thought maybe you would be referring to the interfund transfer process we're going through, which is also, I think, a part of this presentation. I think that's new in the last 5 years, and that certainly is complex.
Yes, and
Right, and the accounting change as well. I will also make one kind of final offer to the commissioners, and I've done this for other.
oh no.
Lost him.
I guess we'll never hear it.
While we wait for Jim to hop back in, I just wanted to underscore the importance of and appreciate your patience and willingness to schedule this meeting today so that we can hit the deadlines. I also want to thank the teams in across the county who have had to address lots and lots of questions from me, provide lots of detail, sometimes last minute in response to requests from the audit teams or from myself in preparing the documents. That partnership and teamwork has been tremendous, and I really appreciate the team's work. And it looks like Jim might be back on.
Thank you. And Rebecca, just
I apologize.
Commissioner
Timed
Lloyd,
out.
I know you're in Yosemite. You could be hanging out in Yosemite and you're here with us. I just want to emphasize that and say thank you.
Of course.
Please proceed, sir.
If I could finish my comment that I was making earlier.
Yep.
Would now be a good time?
Yes.
Yes. You appear to be reconnected. Please
Okay.
proceed.
So, yes, sorry about that. I'm not sure what happened. I will make this offer to the commissioners. I've done this with other counties as well as some other municipalities. I know that the commissioners rotate over time as elections occur. If there is an interest, I would be more than happy to come to a meeting or a work session and spend about an hour and explain in a little bit greater detail why we have different financial statements in this package, what they're intended to portray, how to read them, and to better understand the different sets of financial statements, the government-wide full accrual versus the modified accrual. So if there's interest currently or down the road, I'd be more than happy to come and spend a little bit of time at no cost to help you all understand what these financial statements mean, how to read them, to get more out of them.
Colleagues, do you want to take them up on that?
Uh, yeah, thank you.
I would love to do that.
Okay, I agree. Yeah, if we can ask staff to get that on the agenda, sometime in the next couple months.
Great.
Thank you.
Super.
And then I think, so if that finalizes.
Thank you for your time.
You are welcome. I think you may be on a delay. Colleagues, I think what we're looking for at this point, if that's the presentation, is any final questions, or are you prepared to direct the county budget officer to submit this comprehensive annual financial report to the state auditor?
You ready for a motion?
I don't think we need a motion. I think we just say, yes, we want to make direction.
No, you do need a motion.
Well, then, yes, I think a motion would be great.
I would like to make a motion for the approval to accept the 2024 annual comprehensive financial report, known as the ACFR, and to direct the county budget officer to submit the ACFR to the state auditor, Rachel Harlow Shock.
I second.
Okay, we have a motion and a second. All in favor?
I
I,
just want to say thank you, Rachel, too. Sounds like a lot of work.
Yes. Motion passes, and we are off to the races. I just want to check in, Rebecca, Commissioner Lloyd, your internet was, doing much better about an hour and a half ago. And I want to check in with you. We have a couple of executive sessions. Do you wish to proceed with those, or should we reschedule them? I think I'm happy to just kind of defer to you here.
I'll take Peter's advice, but I also could do it via cell phone perhaps, but I would love to defer it, because if the government shuts down tonight, they're going to kick everyone out of Yosemite, and I'd like to use as much time as possible here.
Staff, what are your thoughts about deferring these? Colton, I know you put item A on. Do you need quick feedback on item A?
I would prefer it, only because the 7th agenda and the 21st agenda are getting really full already. And if we defer to those meetings, we're gonna be here a long time.
Just so you know, we can set a special meeting just to do executive sessions if we think that's going to be an issue. I know that we have the 14th maybe free.
How long do we think
October
this will
4th.
take?
Item A may take.
Well, I need before the 14th, only because the
Right.
budget's due the 15th.
Right.
We just do item A.
Yeah, because the second item, just so the board's aware, is a security issue, which is one that Commissioner Lloyd had actually requested. So that we could defer until she returns.
And I could use some time to do some more research on that.
Okay.
So Commissioner Lloyd, is a quick trip for item A acceptable to you?
Absolutely. Thank you.
Thank you. Therefore, I move the board into executive session for the following purpose.
Pursuant to CRS 246402-4B and E, for the county attorney to meet with the Board of County Commissioners for the purposes of receiving legal advice on specific legal questions pertaining to the intergovernmental agreement between Gilpin County and Clear Creek County for the operation of an animal shelter, and determining positions relative to matters that may be subject to negotiations, developing strategy for negotiations, and instructing negotiators with regard to the IGA.
I second.
We have a motion and a second. All in favor?
Aye.
Aye.
Aye, motion passes. The board will adjourn into executive session. No written minutes will be kept. No decisions will be made. We will return to this meeting in this room solely to adjourn.
And okay,
Oh, sorry, they can still hear you.
can Rebecca still hear me? I'm sending her a separate link for the executive session.
Yes, I can, with the caveat that this is an unsecured connection. Would it be safer to do it via cell phone?
You know what? It may be easier to do it by cell phone, so that would probably be a good idea.
Okay.
Do you
Just
want-
give me a number to call in.
Okay, do we know the number in there to call in, or should we just use?
I'll just use my phone and she can.
We'll call
Okay.
you.
Yeah.
Thank you.
Very good. Thank you.
Okay. Okay, the board has concluded its executive session. No written minutes were kept. No decisions were made, and we are adjourned. Thank you all.